Hi everyone, welcome to our next slide where we explain about an indicator so-called moving average, simple moving average, right? So this is one of my favorite indicator that I use, so pay attentively here, right? Let me take my drawing tool. So this indicator is very simple to understand. So it's a technical indicator, right, that shows average price, not just average price. This is closing price. Do you remember I explained about closing price, right, and open price? So it's not just average price of an asset, but closing price of an asset or a pair over a specific period of time on your chart, right? Basically, a simple moving average is calculated by adding the last X periods of closing price then divided by X. So we are saying, let's say you're calculating moving average, let's say for four moving average, they have numbers, so 1 2 3 what. So let's say 4. So you're calculating X period, the last X periods. Let's say the first one is X1 plus X2 plus X3 divided by what? By n. So for this case maybe it's 3, so it will be 1 plus 2 plus 3. It depends of the closing. These are closing price, so that's why we are saying the average last periods of closing price then divided by number by X, those number of X, right? So that's what we call a moving average. So let's take a look. So let's take a look about a moving average. As you can see, this is our trading view, right? So how do you put or input a moving average? You go to your tools where there is written indicators, then you click indicators like this, then you write simple SMA. Let's just write MA, sorry, MA. This is MA. This is a moving average that we are looking for, right? It's already there. So as you can see, there's a line that is drawn on this. This is a line that is reacting to these prices, right? So that's what we call a simple moving average. But as I said, this moving average is got numbers. So if you click here, if you click, just click on the line, double click, yeah, if you double click, you can see the moving average. This is 9. So 9, we are saying it's calculated, we are saying 9 closing price divided by number of X periods, right? That's what we are saying. So you can change this one maybe up to 20, you see, then you say okay, right? So one thing that you need to notice, the 21, this 21, if you want to go back, just double click the 21, it's reacting less to the prices. So that's what we are saying, we are smoothening this moving average. So if you don't want your moving average to react to these prices, if you want to smoothen it, you increase your moving average. That's why you see from 9 to 20 it's becoming less reactive to these prices. So we're just removing noise, right? Because if you add, let's say, let me go back here, we are saying our formula is like this, right? So let's say, for example, we go up to X, maybe X20, right? So if you add things that are like from 1 to 20, right, divided by X divided by 20, this is closing price divided by 20. So let's say these prices were 1.2 plus 1.5 plus 1.4. These are closing prices, maybe up to 20, right, divided maybe by 20, right? So we are saying you are computing each, so you get your value here, then the next moving point when you're plotting that line is you add another x21. So you are saying you are adding this x21 to this. If you add x21 to this, it won't change this value. Rather than, let's say for these values, if they were 3, right, you are adding an average of 3 numbers. If you add another, let's say another number on these 3, the price will react. That's why you see from 20, as you increase, you are smoothening. That's what you are saying. It won't react. As you can see, your 5 simple moving average, right, it's reacting to the prices. The 30 is Leslie and 6 is as you can see from the diagram here, right. That's how we use your simple moving average. So you need to take note of this. You can change the color of the moving average. You can double click, you can change it as you want, right. So that's your moving average for you. So what else? So let's go, how do you use your moving average? It's very important to know. So there is a technique for professional trader that we use, what we call moving average crossover. So we need to take advantage of this, right. So moving average crossover, before we start to say to explain about this strategy or this technique, right, it helps us to get good entries and exits, right. So we are saying you need to understand something here. What do you need to understand is, let's say so what you are doing is you are using 2 moving average. That's one of the most important. These are 2 moving average that we are using, right. So the other one will be a bigger moving average. The other one will be a smaller moving average. So what we are saying is, this one, it reacts, as we explained, that small moving averages, they react to the prices. This one is Leslie, it doesn't react too much, it doesn't have noise. So you need to understand that for a bigger moving average, it shows like a trend where we are going. Let's say maybe if prices, let's say it can show us, it gives you the future, it forecasts the future. So it can tell us that there are more red candlesticks. Let me use a red. Let's say if there are red candlestick, more red candlestick versus green. I need you to understand the very, very important information. So as you can see, let's say we have a green candlestick here, right. This is our red candlestick. So a bigger moving average, it tells us in the future what happened in the past, the prices in the past, right. It tells us in the past, sorry. So it can tell us that in the past prices, right, there were bigger red candlestick, which means the prices were were becoming they were decreasing, right. These prices, these closing prices, if they are green candlesticks, it shows that the prices are becoming, they are improving, which means buyers are pushing the prices up, right. If it's red for a big, so we are saying what we are doing for simple moving average, we are using this comparison between bigger and small. So what we are doing is, let's say you have a bigger, this bigger, let's say this is the bigger one, this is bigger moving average. So it shows that for the past like a certain period of time, this moving average, right, is a bigger. It shows that the prices were becoming poor and poor, they were decreasing, right, but sellers were pushing these prices down because this moving average is trending down, right. It's very important to understand, it's trending down. So it means they were bigger red candlesticks, so which means prices were decreasing. So if a smaller moving average comes in and crosses here, crosses down, right, this is a cross point, right. If it crosses down here, it shows that for the last few days, right, in comparison to the to a bigger time frame, bigger period, right, the prices, if it crosses, which means the prices were also decreasing, they will become, the price in the past few days, the red candlesticks were becoming bigger and bigger, right? So which means you don't want to go against the trend, you want to sell here. That's what I'm saying. You need to sell, because it shows that in the last, let's say this is a 50, we usually use 50 and 20 if it's 50 and 20. So it shows that in the last 50 period, right, or days, or what certain time frame that you are using, right, the prices were, it shows that the prices were decreasing because they were red candlestick. You can show the moving, but if a smaller moving average crosses below, it shows that in 20 days, in comparison to this 50, these red candlesticks were becoming bigger and bigger. So which means you need to put a sell order. You need to sell because you don't want to go against the trend. It shows that the behavior of the markets, other traders, they are selling, as I explained. But if this moving average comes and then it crosses, this is 20, a smaller moving average like this. If it crosses, this is moving up smaller. If it crosses here, it shows that the green candlesticks, they are now becoming bigger green candlestick. So which means you need to buy. So it shows that in the last 20 period of time, the greener candlestick, they are becoming bigger and bigger in comparison to red candlestick, which means buyers, they are becoming, taking control. The trend is now changing in the last 20 days. So you need to buy here because it shows that there is high demand, people are buying, so you need to buy. So it helps you to spot entries, as I explained, to say how to sell and how to buy in the markets. As you can see, that's the same explanation that I was explaining. The prices, a small moving average is trending downwards, it's crossing here, so which means you need to short here, then you get out at this position. You can see it here, it's now the smaller moving average is crossing up, which means they are becoming greener candles, they are becoming bigger. As you can see, green candles are becoming, which means prices are improving. Buyers, there is higher demand, so you need to buy, don't need to go against the trend. That's what we always say, a trend is a friend. Then you get out when these red candlesticks are becoming bigger. As you can see, these are bigger red candlesticks, which means you need to also to sell here, you need to short here, because in the last few periods, yeah, the red candlesticks were becoming bigger. As you can see, these red candlesticks, they are becoming bigger. It's very easy to see. Please do understand. So we are saying a smaller, in summary, we are saying a smaller moving average. That's what we call a fast moving average, because it's reacting to the prices, right? Crosses above the smaller moving average, it is considered as a buy signal, right? So you need to understand this. So let me show you from this, how do we use so let me show you. I'm trying to see where they are now. Okay, like this, right? It usually works on a downtrend, on uptrend or downtrend. It doesn't work in a ranging markets. You need to. So the first one, it's let's put this as 50. This is 20. Okay, let's put another one. So if you want to put another one, just write MA, as I explained. This is your moving average, simple moving average, right? There are many. So this is the one that we add, right? So you can change the color so that you don't get confused. Come here, click on style, you click here, then maybe you can put this color or red. This is, let's say I want to put a bigger, this is 50. So this is your bigger moving average, you write 50. right? Closing, source, you can put open, but we are using close, right? Then you click OK. So this is your 50 moving average, as I explained. This is your 50 moving average, right? This is your 50 moving average. So let's take a note. So can you see something here? The smaller moving average, this is 20, right? We are using, usually in forex we use 20 and 50. So 20 moving average is crossing below, which means these red candlesticks, they are becoming bigger and bigger, as you can see. So you need to come and put you need to short here. Let me take you need to come and short. Okay, short. You need to come and short here, right? You need to short here. You need to come and short here. As you can see, this red candlestick, so which means sellers that are becoming, these red candlesticks are becoming bigger. As you can see from these red candlesticks, they are becoming bigger. So this was a good opportunity to short. So as you can see, you get out, you exit your position from here. So you need to get out from here. Here. This is your exit. I hope everyone is understanding what I'm saying here. Let me check this. So here, that's your exit if you short, right? So here, as you can see, this is another trade. So you come, this is 1 hour. So as you can see, the pay that you are using is in 1 hour time frame, so you can use it. So as you can see, this is your good buy. So a buy signal, you get out from this position. This is your exit. I will show you entry and exit, right? So this is your exit, right? So after you get out, there is also a sell signal, right? So you need to short, then you get out from here if you short. So this will be a full, you can see if you had to buy here, this will be you lose maybe just a little, but here is another opportunity of shortening, as you can see. So it's very important to understand this. That's how we use your crossover. That's what we call a crossover, a strategy, moving average, right? Very important concept. So you need to understand what's happening. I hope you have understood what I've explained. Let's go to our next slide.